Hey, it's Tom. Welcome to the Value Investor by Tip Pranks. And oh my goodness, Disney results insane. Just blew everybody away. Their financials, the results, it's insane. We got to talk about this and whether we still have a potential opportunity at this price because it had a big run up after this stellar financials. Don't go anywhere. We're going to talk about everything in just a second. Thank you for staying with us. And this is insane. What Disney did is unthinkable. So they beat EPS, looking at my numbers here, by 43 cents. You have to understand that this is a 68% beat. This is crazy. 860 million beat on annual revenues. The breakdown is where it gets interesting. 15 came from media, which we knew about. But seven came from parks. More than $1 billion more than anticipated. So parks are getting back in it. Now, my bull thesis about Disney was not even about parks. It was about the dominance of Disney Plus and ESPN. But there seems to be even more to this company than I initially gave it credit for. Now, the thing that I'm interested in is Disney Plus, and I've mentioned this a second ago. But Disney Plus in itself, everybody's talking about the parks, but look at Disney Plus numbers. I'm looking at the financials now. Subscribers are up 130 million. They were just 95 million last year. That's a 37% increase in subscribers in the year when everybody is losing. They actually raised prices by like 10%. Their subscriber guidance, check this out, for 2024 is 230 to 260 million. That's actually double than what they have today. This is pretty bullish. Now, the crazy part is that people keep forgetting about ESPN. Look at ESPN numbers. ESPN subscribers, the ESPN Plus subscribers, went up to 21.3 million. That's a 4 million subscriber increase in just a year. Again, with price increases. Plus, they just started bidding on the NFL Sunday ticket. And let me tell you, the NFL wants ESPN to win this. That's their favorite partner to do this with. The problem is that ESPN could have never afforded this. That's why it went to other vendors in the past, like DirecTV. Now, I'm telling you right now, they're the front runner to get us back. Unless Disney, ESPN somehow fudge this deal, it's there for the taking. And once ESPN Plus gets that Sunday ticket, it's going to be insane. But wait, there's more. I sound like an infomercial. I'm looking at the numbers here. Look. Revenues are up 34%. Terrific numbers all around whenever you look. Free cash flow of 8.3 billion, by the way, up from under 6 just 2 years ago. Price to sales of 4. And they're still somehow down 22% on a year-to-year basis from just a year ago. This seems like a good deal to me. Hey, what do I know? This isn't financial advice. This is just my own opinion. Do your own research. But all I'm saying, it seems interesting enough to research a little bit more. Now, here's what I want to talk about the problem. There's always a catch. Like in human beings, there's never a perfect human being. There's never a perfect company. And Disney is definitely not the perfect company. There is one catch. And you have to be aware of this. There is a ball and chain attached to Disney. This is exactly why they canceled the dividend. Because of what you're about to see right now. So, they are struggling with massive amount of debt. A lot. But the good news is that they actually came down from 62 billion in debt all the way down to 58 in just a couple of years. I think 2 years. Now, more work needs to be done. Not lying here. However, if you look at their assets to liabilities are actually 1.2x. That is, of course, after I neutralize goodwill. If I just look at goodwill as part of the assets, like most of these analysts do, we would have said 2x, but goodwill is meaningless. So if you neutralize goodwill, you're at 1.2x assets versus liabilities. So meaning that even though they have this massive debt of 60 or 58 billion dollars, they still have more assets than liabilities, which means that they can service the debt as long as they play nice. And of course, when they actually take care of this debt, which I think they will much faster than people anticipate, I think it's when they're going to bring back the dividend, which is going to be another positive catalyst for the stock. And I think that this stock, with these numbers, with everything that's going on with Disney Plus, the streaming service, is taking over. The parks are nice, but the future is that Disney Plus streaming service, nobody can compete with their IP, not even Netflix. Disney have enough original IP to put it on a loop 24/7 for 5 years and not have to rerun a single show. Not to mention the fact that this thing is not even available worldwide yet. I mean, Disney Plus is very limited. This thing is taking over. So I see this as a $200 stock by end of the year 2022. I see a massive run for the stock up ahead. But then again, you have to do your own research. This is just my own opinion with my biases. This is not objective. Do your own research. Use this as a stimulus to actually start looking at the stock, look at the financials, look at the balance sheets, look at the cash flow, read about the TAM, the business model. Make sure that this is the right stock for you. And if it is, well, happy investing. As always, thank you so much. Let us know below which other stocks you want us to cover here on The Value Investor by Tip Ranks. See you in the next video.